Members' motion with no legislative effect. Members who wish to speak, please press the Request to Speak button. The Council will proceed to a debate on Dr. Webster NG's motion on developing a strategic tax regime to consolidate Hong Kong's status as an international financial center. 2 members will move amendments to the motion. This Council will proceed to a joint debate on the motion and the amendments. I will first call upon Dr. Webster NG to speak and move the motion. Then I will call upon Mr. CHEN and Captain Lothair to speak in sequence, but they may not move the amendments at this stage. The joint debate now begins. I now call upon Dr. Webster NG to speak and move the motion. Dr. NG. President, I move that the motion as printed on the agenda be passed. In 1940, there was a War Revenue Ordinance 1940 promulgated, and that was the starting point of the tax system in Hong Kong. At that time, Chinese merchants had concerns about this tax system that originated from the West. After 1952, 1966, and 1976, there were 3 tax reforms, and we were able to carve out our own tax path. And this has laid a foundation for the low and simple tax regime, and we have managed to accumulate tax reserve. The history gave us the insight that the success of a tax system lies not in the interest rate or its model. Instead, it is about whether it caters to the strategic mission and the era that we are at. We are in the inaugural year of the National 15th Five-Year Plan, and we're formulating the first 5-year plan for Hong Kong. Our primary mission is to contribute to our country as it moves towards its modernized socialist system. We should come up with a sustainable and strategic tax regime framework. According to the latest Global Financial Center Index, Hong Kong ranks the 3rd among the world and the 1st in Asia-Pacific. Banking, insurance, and financial sectors ranked 1st in Hong Kong, and we're ranked 2nd in investment management. The report reminds us that Hong Kong's professional services, government regulation, and market transactions only rank the 3rd, the 6th, and the 8th respectively. That means we are at the top level in terms of our capacity. However, we still lag behind in terms of our soft power in building ourselves into an asset management center. That means we should move away from pursuing speed and scale. We should instead focus on building an ecosystem and ensuring our long-term competitiveness. A strategic regime framework is the key of our success. It should not only be a tool for us to gain revenue. Instead, it should help drive industrial upgrade. It should be a tool for us to fight for resources and enhance our competitiveness, as well as to mitigate risks. We are facing 3 major changes. First, we're seeing a change in global rules. We are seeing the promulgation of BEPS 2.0. It means that we are no longer vying for low tax rate. Instead, we should focus on our governance level. Second, we're seeing more fierce regional competition. Singapore, UAE, as well as Hainan free tax zone also strive for tax policies to draw for talents. I've had exchanges with the Ministry of Finance in Beijing. In 2025, after the close of Hainan, I think we deserve to look at the tax regime in Hainan. Internal rules have changed. We should come up with a clear positioning to cater to Hong Kong's needs. What we need is not to levy more taxes. Instead, we should come up with a smarter system. This is not just about balancing the figures. It's about answering a more realistic question. If the customized tax regime in Singapore can attract family offices, can our tax system in Hong Kong also ensure success? We should adhere to the low tax regime. Through a targeted tax regime, we should achieve growth points as well as sustainability. On this front, I'd like to stress that there are 4 core breakthroughs that we have to achieve in order to come up with a strategic tax regime framework. First, we should focus on industry. Our tax regime should dovetail with the strengths of the National 15th Five-Year Plan. Green technologies, commodities, as well as RMB settlement should be covered. Emerging fields, as well as service supply chain management and so on should also be covered. That is both new industries as well as traditional industries. We should incentivize the development in the northern metropolis. We should be at the forefront. The policy should come before industry development. We should not fall behind. Also, we should strengthen our advantages and strengths. We rank second in terms of wealth management. In order to be the top, we have to upgrade our tax system. We should optimize our regime to support the building of an offshore RMB hub. We should also cover aircraft leasing tax regime. So it should not just be tax incentives. Instead, it should be a strategic regime. Also, we have to leverage our talent. In the face of competition from Singapore as well as the UAE, we have to come up with a clear tax framework. It should cover individual profits tax as well as also tax incentives that are linked with equity shares. We only have one target, that is to build a high-end caliber hub. To ensure high-quality development, we need quality talent. We have to both attract and retain talent, and only by doing so that we can safeguard our competitiveness. Lastly, competitiveness is about our business environment. So far, we lack a modern corporate rescue regime. By establishing this regime, we can rescue corporations and also stabilize assets as well as employment. This mechanism can rescue high-potential enterprises, allowing them to continue to create profit and revenue. And this is a visionary regime. Therefore, I urge the SAR government to reactivate the legislative process so that we can move towards the establishment of such a regime. I'm happy to hear that the SAR government has established the Advisory Committee for Taxation. I hope that this committee will not only be an advisory committee, instead it can help come up with strategies to dovetail with the first 5-year plan for Hong Kong. I hope it can bring together wisdom of various industries. That way we can contribute to our country and also promote sustainable development of Hong Kong. I will listen to the insights to be offered by members. I hope members will support my original motion. I so submit.
And I propose the question to you that the motion moved by Dr. Webster be passed. Mr. Rock Chen. Madam President, I support the motion moved by Dr. Webster on developing a strategic tax regime to consolidate Hong Kong's status as an international financial center. I'm also moving my amendment. The core of my amendment is to come up with tax policies and develop tax legislation through the dedicated legislation for the Northern Metropolis. The goal is for enterprises in the Northern Metropolis to enjoy tax concessions and tax waivers. Mr. Jeffrey Lam, the chairman of the board of the Hong Q Industrial Park Corporation, also proposed a 5-year tax concession for the enterprises settling there, but that is not allowed under the law yet, so further negotiations are needed with the government. The Northern Metropolis is moving fast. We bring in the enterprises, we can create an industrial ecosystem. That's key to the success of the NM. For a strategic enterprise to decide whether to go somewhere, they consider many factors. Financial modeling and investment returns are key considerations. Offering these businesses tax concessions and facilitation measures will be a powerful way to draw them to a place. So I want to stress that providing tax concessions as an incentive to bring in strategic enterprises is of strategic importance. The industry parks in the NM are trying to bring in firms in big data, artificial intelligence, and other advanced areas. We roll out strategic tax concessions to bring in mainland and overseas strategic enterprises. These businesses will then leverage their industry chain and network of resources to work with our local resources. They will provide the technology and funding channels, and that will give rise to Hong Kong's own unicorns. Strategic enterprises also bring top-notch talent with them. These people can also team up with our own local institutions, and that can train up our own INT and financial professionals. So we'll get someone who is ahead of us to bring us up to their level. We need conditions that are attached to our tax policies. There are many quantifiable indicators that we can consider. For example, the company will have to achieve a certain level of revenue every year. They have to hire a number of local workers. They have to invest a certain sum in R&D, and they have to contribute a certain amount to our gross domestic product. They have to meet those standards to qualify for our tax concessions. And while we uphold the interests of all stakeholders, we should also explore a corporate rescue procedure for corporate restructuring. That's because views are divided in the community on bringing in such a regime. The labor sector is worried that the statutory corporate rescue procedure may be abused so that the company's assets may be transferred, and that would prevent workers from applying to the protection of wages upon insolvency fund for ex gratia payment. Small and medium enterprises are also worried about ending up as unsecured creditors, and they have to accept the massive haircut to debt imposed by the supervisors. The government consulted the industry a number of times over the years that points to the complexity of the issue. That's why we say we should uphold the interests of everyone, and then we work out a corporate rescue procedure that's acceptable to all sides so that we can improve our institutions as an international financial center. My amendment aims to create a more targeted strategic tax policy so that we can improve the local financial and INT ecosystem. I urge members to support my amendment and also Dr. Webster Ng's motion. I so submit. Mr. Lothair Lam. Thank you. I support Dr. Webster Ng's motion today. I'm convinced that a strategic tax system will consolidate and enhance Hong Kong's status as an international financial center. It will also help us achieve the missions expected of us under the 15th five-year plan that includes being a financial, aviation, shipping center, and also a commodity trading center, and also a green fuel bunkering center and green fuel trading center. For all these industries to thrive, they need financing. A robust scene of industries will also give rise to the development of financial derivatives. Each part complements everything else, and that will mean everybody is better off in the end. That's why I am moving my amendment. I urge the government to make the most of our status as a financial center, to come up with bespoke tax policies so that we foster asset financing for aircraft, ships, and also derivatives for green energy, so that we can foster Hong Kong's development as a shipping center and trade center and an aviation hub. I work at a shipping and port operation company. I've been in the shipping industry for more than 20 years. In 2021, there was a tax break for ship lease. Many companies benefited. This year, the government will also further enhance the tax breaks for maritime service providers. There will also be a half-rate tax concession for commodity traders. This shows the government is making a flexible use of our tax system to foster the development of our strategic industries and make us more competitive. Next month, there will be a bill offering the half-rate tax concessions for commodity traders. Let's take this as an example. One parameter for this tax concession is that the eligible company will have to meet certain requirements in Hong Kong shipping industry. Commodity traders trading often involves futures. The derivatives trading scene is booming. Based on an international study, for commodity derivatives, futures make up 3/4 of it. Most trading happens in Asia Pacific. So the half-rate tax concession for commodity traders will also foster financial trading in derivatives. In my previous speeches, I urged the government to roll out financing and trading for real-world assets. And we should achieve greater depth and breadth of our financial market. RWA covers aircraft, ships, and their leasing contract. There are real-world assets backing up the transactions, and they can also generate cash flow. The blockchain and decentralized finance are also on the rise. Hong Kong is an emerging aircraft leasing center. In 2024, we passed a law on granting tax concessions for aircraft leasing. Wet leasing, meaning the provision of the plane along with the crew and also the finance transactions are also covered by the tax concession. There's the 1-year minimum lease requirement is also gone, and that's making our tax system more flexible. Still, Hong Kong is behind Singapore and Ireland. Market expectations are that the aircraft leasing market has a long way to go, and mainland aircraft businesses are looking to go global. Can we come up with a strategic tax system to make that happen? When aircraft leasing businesses decide whether to go to a place, they consider the following factors: withholding tax and also loss offsetting. But our own tax system has yet to be expanded, and we don't have a loss offsetting system. Ireland has robust policies in this area, so this area merits the government's further study. A tax policy has an impact on the high value adding industries. The tax system can complement the development of industries. This can enhance our competitiveness and help us contribute to our country's development. So submit and support the motion and the amendment. I also hope members can support my amendment.
Secretary for Financial Services and the Treasury. Thank you, President. I'd like to start by thanking Dr. Webster NG for moving this motion on developing a strategic tax regime to cement Hong Kong's status as an international financial center. I would also like to thank the other two members' amendments. We need to fully leverage on our unique advantages of enjoying strong national support and being closely connected to the world. This is not only the lifeblood of our economic development, but also our core strategy for integrating into the overall national development. We are preparing Hong Kong's first 5-year plan full steam ahead. It is my privilege to listen to members' views. This motion is not just forward-looking, but also covers a very broad scope. Recommendations cut across multiple policy bureaus. I will share the government's work in several relevant areas. Hong Kong is known for its simple, transparent, and low tax regime. In the World Competitiveness Yearbook 2025 published by the IMD, Hong Kong ranked first globally in tax policy. This shows international recognition of our tax system. Against the backdrop of a reshaping global economic landscape and evolving international tax rules, we need to consolidate our existing advantages while rolling out appropriate tax measures to drive economic diversification. We have been strategically utilizing tax concessions to cement Hong Kong's status as an international financial, commercial, and logistics center. We now offer various tax incentive for multiple sectors. Examples include 1. Regarding asset and wealth management, since 2019, the government has introduced 3 concessionary tax regimes benefiting funds, carried interest, and family-owned investment holding vehicles, FIHVs. These have been widely welcomed by the industry. To further enhance the appeal and competitiveness of these regimes, the government has proposed enhancement measures, including expanding the scope of tax exemptions to cover more asset classes such as loans and private credit investments, digital assets, and precious metals, including gold. We plan to introduce the relevant legislative proposals into the Council next month. 2. In addition to the above concessionary tax regimes for funds and FIHVs, which will cover transactions of precious metals like gold, we will explore providing tax concessions for qualifying entities conducting gold trading and clearing in Hong Kong to further promote the gold market. With regard to the maritime industry, the government provides a half-rate tax concession for marine insurance businesses. Other specific businesses of Hong Kong insurance companies and insurance broker companies, as well as the offshore and onshore risk insurance business of captive insurers, can also enjoy this half-rate concession. In respect of scientific research, the government provides enhanced tax deductions for qualifying R&D expenditure. For the total amount of qualifying R&D expenditure incurred by enterprises, including payments to designated local research institutions for qualifying R&D activities, the first $2 million enjoys a 300% tax deduction, while the remainder enjoys a 200% deduction, with no cap on the deduction amount. These examples demonstrate the government's proactive use of the tax concession regime to create an ideal business environment for various industries and drive local economic development. We'll continue to take into account industry views and actual circumstances to keep enhancing our tax system. The policy address last year proposed formulating preferential packages, leveraging on policy tools such as land disposal, land premiums, subsidies, and tax concessions to draw high value-added industries and high potential enterprises to establish a presence in Hong Kong. Regarding tax concessions, the FSTB has formulated a preliminary framework and is firming up the details with various policy bureaus. Tax policy has a lot to do with the activities of the industrial, commercial, and professional sectors. To ensure our tax measures appropriately meet the development needs of the industry, the FS announced in the 2026-25 budget the setup of the Advisory Committee on Tax Policy to tap into the views of professionals from these sectors. Turning to the corporate restructuring mechanism, the government has been committed to enhancing the corporate insolvency and restructuring regimes to safeguard the interests of company shareholders, creditors, and employees, as well as to consolidate our competitiveness as an international commercial and financial center. In fact, Hong Kong is not without a corporate restructuring mechanism. The existing market-led scheme of arrangement mechanism established under Cap 622 Companies Ordinance is the primary tool for corporate restructuring. It operates effectively under court supervision with high credibility and allows financially distressed companies to negotiate restructuring plans with creditors and members, helping them to avoid liquidation and achieve recovery. Over the past 5 years, more than 40 court-sanctioned schemes of arrangement orders have been used for debt restructuring, covering sectors such as aviation, mining, and real estate, reflecting the mechanism's broad applicability across different industries and scenarios. We'll continue to monitor its operation to assess the need for further enhancements in the future. President In the face of the challenges of a changing global economic landscape, Hong Kong must continue to harness our unique advantages of one country, two systems, and proactively align with national strategic development plans. We are dedicated to formulating Hong Kong's first five-year plan to effectively interface with the national 15th five-year plan. The issues raised in the members' motions are also the key areas of focus for the FSTB in formulating the five-year plan. I will now listen to members and respond further to your valuable suggestions in my concluding remarks. Thank you, President.
Mr. Adrian Ho. Thank you. I support Dr. Webster's motion and both amendments. Global competition is becoming fiercer. For our future, we need a better and strategic tax regime to keep attracting businesses and investment as well as bringing in talent. The government improved the tax system for carried interest. That's a step in the right direction. I support that and I have high expectations of it. That change will make Hong Kong more attractive to asset management. For us as a financial center, we also rely on our stock market. Our stamp duty on stock transfers is still higher than other financial markets. I'm not asking for a change overnight by getting rid of the tax altogether, like what the US market is doing. But I'm saying, can we reduce the rate of the stamp duty? That can foster a trading atmosphere and grow the pie. I talked to mainland entrepreneurs. I learned that when mainland cities want to drive emerging industries, the local governments provide bespoke tax policies to attract investment. Hong Kong has been rather conservative on this front. As the northern metropolis is going ahead, we should consider more flexible tax policies. We need dedicated tax policies to attract frontier technology firms and also strategic enterprises. So far, I've been talking about tax concession. Our revenue from land sales is shrinking. Public finances are under strain. Cutting taxes alone is not realistic. So as we look to reduce the tax rate, we should also think in the long term. Once the northern metropolis is off the ground, there will be a huge amount of economic activity, and that will mean considerable tax revenue. Of course, it will take a while for the northern metropolis to start generating revenue, so we have to think about medium and short-term measures. There was a time the government consulted on a sales tax and there was fierce opposition, so that plan was shelved. It's been 20 years now. Can we revisit part of that proposal? The government has been trying to get people to stay healthy. When people are healthier, the strain on public health care will ease, and we have launched our first weight management plan. Back in 2018, the UK started charging a duty on drinks with high sugar content, and that measure has worked. So can we consider a sugar duty? Every gram of sugar contains 4 calories. And every gram of fat contains 9 calories. So can we propose a trans fat tax? For any food, if their trans fat exceeds a certain level, they should be subject to such a duty. Many countries and regions offer products with labels that read zero trans fat. Can we consider something along that front? A strategic tax system is a broad topic. This has to do with our future tax policy, our fiscal setup, among other things. The Financial Secretary announced an advisory committee on tax policy. That committee should look into these matters. We should seize this opportunity to come up with a tax framework that is far-sighted and that can support Hong Kong's economic development and support the motion and amendment.
Mr. Nick Chen, President, I speak in support of Dr. Webster Ng's motion on developing a strategic tax regime to consolidate Hong Kong's status as an international financial center. Dr. Ng just now said that a strategic tax regime is not about levying more taxes. Instead, we should have a targeted approach. There's a saying that's about letting go some wealth and gaining more. As we optimize our tax regime, we should think about how we can levy less tax in a more reasonable manner to attract enterprises from outside Hong Kong to come so that we can create more jobs and drive economic growth. At the national level, of course, our country has been promoting 6 emerging industries and 6 future-oriented industries. On these 12 industries, as well as gold and commodities, I think we have to come up with ways to attract enterprises to come through tax incentives. Of course, we already have a very low tax regime, but we need to further improve our business environment for emerging industries such as AI. If we are to attract the relevant enterprises to come to Hong Kong, we should expand the patent box tax incentives. We should lower taxes related to IP on AI as well as brain-machine interface. On these kind of R&D projects, can we have a greater tax exemption? Say an enterprise invests $100 on this kind of R&D, can we regard them as having spent $150 or $200 so that they can enjoy a tax break? That way we will be able to build ourselves into a regional economic hub, and we can also provide more tax concessions for targeted enterprises. On R&D related tax breaks, we've been talking about how the mainland has been encouraging and promoting the transformation of R&D outcomes. On cross-border projects in this regard, can we come up with some kind of tax incentives? Now, Dr. Webster Ng mentioned that there is a lack of corporate rescue regime in Hong Kong. I agree with Dr. Ng that we need such a regime in place. Without such a regime, it would affect the confidence of enterprises in staying in Hong Kong. It would also undermine our competitiveness in the global ranking. There's an amendment raised by Mr. Rock Chen. I think we have to take care of the needs and interests of various parties before we come up with the corporate rescue regime. There are many employees in Hong Kong who have worked for years. We have to ensure that they have comprehensive protection under the rescue regime. According to the 2020 bill, if a company is under supervision and it's still owing its employees wages, it should pay the employees back in 3 phases. If it fails to pay the employees, then employees can apply to the court to liquidate the company. That would trigger the Protection on Insolvency Fund. That means we have to protect all relevant stakeholders, especially the employees, in order to consolidate Hong Kong's status as an international financial center. The government should seize the opportunity to complete the legislative exercise. I speak in support of the motion. Thank you. Ms. Grace Chen. President, I speak in support of Dr. Ng's motion, as well as Mr. Rock Chen's and Captain Lothair Lam's amendments. We should come up with a strategic tax regime and provide various tax incentives for different industries. Today, I'd like to speak about how we can plan for a strategic tax regime framework in order to promote philanthropic businesses in Hong Kong. According to Section 88 of the Inland Revenue Ordinance, registered charitable organizations can get exemption on profits tax, and also registered enterprises with donations or those who donate can also get a tax break. We can improve the percentage from 30% to 40% in terms of the tax exemption. Apart from this, I hope the government can, through the tax regime, in a strategic way, promote charity or charitable businesses. That way, we would not limit the form of donations we see. Like I said in the second oral question today, charity can cover social enterprises as well as investment. Charitable businesses are carried out by a lot of family offices around the world. I hope we can provide tax incentives for this kind of philanthropic activities. My first suggestion is as follows. There is the Donors Advisors Fund. This is popular in Europe and North America. Investors can put in funds and provide advice on how to use the funds. However, unlike private funds, these funds are not regarded as charitable funds. So the government could think about attracting this kind of funds to be set up in Hong Kong so that they can expand their philanthropic or charity businesses here. Also, a lot of enterprises are currently making use of their internal resources to engage in charity. For example, enterprise staff, they make use of their downtime to participate in volunteer project. Power Z is a project organized by MTRC staff. This takes up many resources. However, currently, they do not enjoy any tax exemptions. So I hope the SAR government can make reference to the social investment tax relief in other places. This is about offering a tax break for recognized social enterprises or projects that contribute to the community. There should be tax relief for them. That way we can encourage more social enterprises as well as influential organizations to participate in philanthropic activities. We should not just think that social welfare is costing money. It is a kind of social investment. There are many examples showing us that there can be financing models. Today's charity businesses in Hong Kong have a special place, and it is an important component of our economy. I think Dr. made a very good point. We have to adopt a targeted approach that caters to our era and circumstances. We should think about how we should promote tax incentives for philanthropic businesses in our first 5-year plan. That way we can promote charity. Next, Mr. Hong In. President, we are at a critical juncture of global economic restructuring. We have to be proactive and dovetail with the National 15th Five-Year Plan. We have to seize the opportunity and formulate the first 5-year plan for Hong Kong. Tax regime is our core competitiveness. It can also promote reform and consolidate our status as an international financial center. In the past, the government rolled out the 2-tier profits tax regime. The series of tax reforms enabled Hong Kong to rank 3rd globally and 1st in Asia Pacific in the Global Financial Center Index. We have over 3,000 family offices in Hong Kong. In this year's budget, it is announced that the relevant tax regime will further be optimized. It will broaden the definition of funds. For precious metals and digital assets and commodities, they will be incorporated as qualified offices or enterprises that get a tax exemption. However, we face fierce competition from Singapore and other economies that adopt a low tax regime, so we should not stay complacent. We need a comprehensive strategic tax regime framework. We face various challenges. Externally, there is competition from other jurisdictions. There are also geopolitical tensions. Also, we have to think of ways to retain talents internally. Because of the company's ordinance, we lack a comprehensive corporate rescue regime, and many high potential enterprises face forced liquidations, and this leads to an outflow of capital and it affects investors' confidence. All these challenges show that there is a pressing need for us to come up with a corporate rescue regime. I have the following 3 suggestions. First, we have to come up with a strategic and competitive tax regime framework. Building on the conventional low tax regime, we should introduce targeted tax breaks that target green businesses and green tech. To ride on the trend of global tax reform, we should be the premium hub for cross-boundary payment. Also, we have to bring together talent. We need talent for asset management, maritime law, commodities trading, AI, and other frontier technologies. We need to build an ecosystem for these industries. We need to draw for talents. We need the relevant policies to attract talents to come through tax incentives. That way we can retain the talent and give full play to our strengths in the Greater Bay Area. Third, we have to come up with a comprehensive corporate rescue regime. The SAR government should ride on the existing scheme of arrangement that deals with over 40 cases every year. There should be a mechanism in place for companies with potential. They should be able to benefit from this regime, and employees' rights should be protected to make sure that SMEs will not stall wage payments on their employees. This will go hand in hand with the strategic tax regime framework. Overall speaking, if we do not improve ourselves, we will fall behind. I hope that we can enhance our competitiveness and grow the pie. I speak in support of the motion and the amendments. Thank you.
Mr. Hon Chow. Thank you, President. First of all, I'd like to thank Dr. Ng for moving this motion. We explore the development of a strategic tax regime to cement Hong Kong's status as an international financial center. I believe we all understand the advantages of a low tax regime in a favorable business environment. Over the past few years, the government has been adopting different measures such as aircraft leasing tax regime as well as ship leasing tax regime. We can all see the results of these measures. We can see more transactions that have taken place as a result. I'd like to talk about the high value-added shipping industry. In the original motion, maritime insurance shipping are mentioned. In the unit of tons, Hong Kong ranks fourth when it comes to ships with Hong Kong flags. However, when it comes to the maritime insurance total amount, it only has a single-digit figure. Comparing with London, we're still much away from London. But I believe this system isn't fair. We can catch up. These companies should be able to take out maritime insurance in Hong Kong. We can see that there is an ever-evolving global political and economic landscape. There are wars, and these have turned away many companies from taking out maritime insurance. There is a risk pool in shipping. And when it comes to war insurance, these can be taken out for ships flying the Hong Kong flag. These provide safeguards for ships flying the Hong Kong flag. And I believe the Hong Kong government should do more in terms of publicity. Not many people are well aware of this situation, but I believe it is worth our publicity efforts. With regard to family offices, our single-family offices are on the high side. We're leading in our region. This is because of the appeal of Hong Kong. Therefore, in the 15th Five-Year Plan, our country has given us the important mission of becoming an international asset management center, and we do have the conditions to achieve this. When it comes to the trading of precious metals, there are tax preferential packages. To many enterprises, low tax is indeed what is attractive to them. But the fewer regulations or the fewer administrative procedures, the more appealing Hong Kong is. Irrespective of the size of the company, they do have compliance costs, and the lower the cost, that means fewer regulations, and that really makes a difference. Mr. Rothschild made a point in his amendment that is about corporate rescue regime. There should be more discussions in the community. Say Chapter 11. This gives breathing space for companies. In the discussion with debtor and creditors, will the interests and benefits of employees be undermined? I believe we need to come up with legislation to protect them. We need to ensure that they can still survive, and this will benefit local economy. That is why we need to take forward this area in a more serious manner. Thank you, Dr. Johnny Ng. Thank you. We're at the critical juncture of economic reshaping. Neighboring regions are calling for talent and investments as well as capital. We cannot just rely on our advantages of having a low tax regime. We must develop a strategic tax regime in order to cement our status. Our first five-year plan needs to be in alignment with National 15th Five-Year Plan. That is why, with the development of the new quality productive forces, I support Dr. Ng's motion as well as the two amendments. One, we need to improve the tax environment for digital assets. Hong Kong is working hard to develop itself into a global digital asset center. Hong Kong has a low profit tax. However, when it comes to Web3 enterprises, what does Hong Kong think? How can we really attract these enterprises to come to Hong Kong? When it comes to taxation arrangements regarding talent, can we encourage tokenization? Can we provide more exemptions? When other countries cannot do so, I believe we can study this area. Then we can attract different talent as well as enterprises to come to Hong Kong. We can develop Hong Kong into a global Web3 headquarters. We can also forge a financial ecosystem. With tax exemptions for funds, can we extend it to eligible digital asset and family offices? We can grow the economic pie of Hong Kong larger with these measures. We can also keep capital in Hong Kong. We need to use tax leverage to attract green tech enterprises to set up operations in Hong Kong. We cannot solely rely on government funds. We need to make good use of tax strategies. We also need to promote aeronautical science, aerospace science, green tech, life and health science, AI, and so on. When it comes to risk capital and angel investors, we need to provide more tax exemptions. These policies will turn more social capital into patient capital. Then more capital will be used to invest in technologies. Regarding a corporate rescue regime, the original motion touches upon the corporate rescue regime. In the course of corporate restructuring process, we need coordination between taxation and litigation. The government should provide discretion to companies undergoing debt restructuring. Companies should be allowed to hold the payment of taxes. This will not stifle the development of these enterprises so that they can stay afloat temporarily. Then we can send a message to global investors that we have indeed a strong business environment. Tax fuels our development. We need to take bolder steps to attract more enterprises to come to Hong Kong. We need to use our strategic tax regime as our greatest weapon to cement Hong Kong's status as an international financial center. Mr. Sunny Tang, thank you, President. A simple tax regime is a cornerstone of the success of Hong Kong. It is also what cements our status as an international financial center. This is our core advantage. There have been uncertainties in the global economy. Multinational enterprises, M&E, are actively reviewing their global business as well as their global procurement portfolio. We shouldn't be a one-trick pony. We must be proactive and we must propel the long-term economic development of Hong Kong. Under the budget, it is announced that we will set up the Advisory Committee on Tax Policy to be led by the FS. We attract high-value and high-potential enterprises to come to Hong Kong. This is indeed our first step. Hong Kong has a lot of traditional industries. They are high value, and our international supply chain is very influential as well. They proactively make good use of AI to transform and upgrade. That is why I expect that the Advisory Committee on Tax Policy should cover these traditional industries as well. They should add further vitality to these industries. Using strategic tax regime to attract more capital and investments is the key. We need to be proactive. We need to develop a strategic tax regime that is proactive to attract M&Es to come to Hong Kong. Procurement center often involves a lot of capital and orders. They need a massive ecosystem when it comes to professional services. When there is a procurement center, we can benefit suppliers in the downstream as well as the SMEs in Hong Kong. When we have a procurement center, I believe this will achieve synergy for us. This will also consolidate our advantages in the industrial center. We need to turn into good account these flexible and aggressive tax policies as well. If mainland enterprises choose to set up the regional headquarters or business hub in Hong Kong, I believe we need to provide tax preferential packages based on their contributions to the local economy. There are hundreds of millions of businesses from enterprises. If we attract just a minor part of these enterprises to Hong Kong, this will already constitute significant economic benefits. We also need to provide more tax incentives to the new parks in Santine Technopole and Hung Shui Kiu. I believe we should also provide more tax concessions or half-rate concessions to enterprises that come to Hong Kong who will carve out a new business plan or area in Hong Kong. When we have such pioneers setting up a presence in Hong Kong, this will bring about a cluster effect, and then we will be able to attract industrial chains or even competitors to come to Hong Kong. We need to make our tax concessions and advantages transparent, and then the tax advisors, Big Four in Hong Kong, will also have every reason to promote the good business environment of Hong Kong to the international industrial and commercial sectors. We can show that the tax regime in Hong Kong is indeed very good. It is even better than our neighboring regions. Our global economy is ever-changing. It is full of uncertainties. We need to seize upon these good opportunities to attract more enterprises to come to Hong Kong so that we can make greater contributions to the high-quality development of our country. Thank you.
Reverend Peter Kun. Mr. Deputy, the global economy is going through a process of transformation. For a long time, our low tax system has been our ingredient of success. It's our cornerstone, in fact. But given the new situation, a low tax regime is not good enough. Our country has rolled out its 5-year plan, the 15th 5-year plan, and we are drafting our first 5-year plan. This is a great opportunity to reform our tax system, and we should seize this opportunity. The tax system is not just about government revenue, it's about leading industries in upgrading and transforming themselves. We must move with the times. We need a strategic tax regime. We need to broaden our tax base. Only then will the government be able to redistribute wealth in the community, and that's how we can resolve deep-seated tensions. A far-sighted tax framework will be the difference of success or failure for our next 10 years. We'll have to look at capital and asset management. In recent years, family offices and high-end asset management businesses are booming in Hong Kong. Our regional rivals, such as Singapore, are competing with us, and that competition is intensifying. Relying on tax concessions alone will not be good enough for retaining global investment. Our strategic tax regime will have to be more bespoke and more in line with the needs of the industry. For long-term capital gains and the distribution of gains from private equity and intergenerational transfer of wealth, for these areas, we need a consistent tax system so that decision makers put their center of operation in Hong Kong. we should also come up with a salaries tax reduction system for high-end talent so that we keep both talent and capital. We should also look beyond just wealth management. We should look at new sources of revenue. Commodity trading is an underestimated source of revenue. With the restructuring of global supply chains, the need is growing for risk management and financing for commodity trading, for green finance, food, crops, and also brokers of commodity trading. We should provide tax concessions for maritime arbitration, trade financing, and insurance. We should bring everything together, and then we can create an industry system. And this will fuel a boom of professional services in green technologies. For wealth management and commodity trading, we have to face up to a structural issue. We benefit from a low-tax system, but our tax system cannot stand still. We used to rely on salaries tax, profits tax, stamp duty, and land sales, but our tax base remains narrow. And government revenue may experience volatilities with the economic cycle. Maybe the time has come to implement a sales tax. If we anticipate opposition in the early days, we can take a phased approach. We should study the idea of a sales tax. We have to broaden our tax base. Only then will the government have what it takes to achieve poverty relief, and then we can meet the challenges of demographic shift. For a strategic tax regime, this will bring key opportunities for us in the next 5 years. We need new sources of revenue so that we can maintain a unique tax system that is also providing for a resilient financial framework so that we can enhance and consolidate our status as a financial center. So submit. Mr. Andrew Lam. I thank Dr. Webster NG for his motion and the 2 amendments. The government is working on its first 5-year plan to align with the national 15th 5-year plan. That will mean a new governance framework that will also mark a change from a blueprint for us to go from being a super connector to a super available adder. We came 3rd in global competitiveness. We're doing well, but we're falling behind in other areas. Labor productivity gain is where we're weak. We came 60th among 96 economies. Our population is aging, our population growth is slowing, and we've fallen to the 64th place. So we're content with a labor crunch. Businesses will not want to come here if they know they will struggle to hire workers. Our cost of living and office rents are also at the 66th place. In R&D research, the expenditure is only at 41st place in terms of its share in the GDP. So we could invest much more in R&D. We have to focus on R&D. We cannot adopt a zero-sum mindset when we look at ourselves and the rest of the Greater Bay Area. We should work with other GBA cities. Our land is limited. We cannot expect to have the entire industry chain in Hong Kong. Instead, we should make up for what the mainland lacks. We should seek differential development. We should focus on certification standards and financing. We should focus on research and financing. Mass production and marketization should be left to the rest of the Greater Bay Area, and then we will be able to transition from being a super connector to a super value adder. To achieve this, we will need robust policy support. Singapore has targeted tax concessions. They have a pioneer scheme slashing the tax rate to 10% or even 5% for some industries so that they can lure enterprises. That's why I call for a strategic and far-sighted tax regime. We want strategic enterprises and high-end talent. That is not to say we should reduce our taxes across the board. We are facing $100 billion of fiscal deficit. Reckless tax cutting will be a bad idea. We have to provide tax concessions where they matter the most. We have to consider our needs and provide bespoke tax measures. For businesses looking to set up R&D centers and corporate regional headquarters in green hydrogen industries, we should provide bespoke tax concessions. Now, for wealth management, commodity trading, and marine insurance, we need to attract such talent by offering bespoke tax concessions. That way, we don't just bring together capital. We will also transform our economy. We will be able to bring together talent. As we draw up our first 5-year plan, we should develop a strategic tax regime, and this will enhance our status as an international financial center. This will also allow us to go steady towards the goal of becoming a hub for high-caliber talent, and this can help us support our country in going global. Ms. Julia Lau. I support Dr. Webster Ng's motion and Mr. Rock Chen and Mr. Lothair Lam's amendment. I want to speak from the perspective of landscaping, surveying, and engineering. We need a far-sighted and strategic tax regime. A tax regime is not just a fiscal tool, it's also a policy leverage. The way a tax regime is designed affects businesses' willingness to come here. Registration, settling here is not just about registration. We also need to provide the right built environment and also a professional landscape. So a reform in the tax regime has to go hand in hand with infrastructure and urban transformation. The motion also mentions strategic industries and bring in talent. We need asset management, wealth management, marine insurance, supply chain management, and green technology. For these industries to be here, we will need to provide the right environment. We need leadership, project management, and also the provision of commercial space. This is where professional services can contribute. A tax system can reduce business uncertainty to encourage medium to long-term investment. And then there will be greater demand for professional services, so that we can have a cluster of high-growth industries, and that will mean opportunities for local talent. The motion also mentions green technology and also Hong Kong's overall business attractiveness. When the government develops a strategic tax regime, we need supporting tax incentives for green building, energy conservation, and the adoption of new materials. We should provide tax incentives. In global competition, in finance and in economics, the competition is also about a city's quality and its environment. A tax system should have something for green design. and that can help us bring in and retain businesses and talent. The mention also refers to a corporate rescue procedure. We value project continuity so that it does not disrupt urban renewal, especially for property development and for businesses in projects with a long life cycle. A more transparent corporate rescue procedure will lead to greater project market confidence, and this will ensure continuity in urban renewal and land development. A corporate rescue procedure can ensure such continuity. I support the motion. I support a strategic tax regime. The design of the tax regime should also incorporate the built environment. The tax regime can be linked to a number of policy objectives to encourage revitalization and redevelopment. And we should speed up green investments. We should improve the corporate rescue procedure to ensure the reliability of project delivery. With all the right conditions, we will be able to attract investment and talent and also strengthen and enhance our role as an international financial center. I so submit and support all amendments.
Mr. Andrew Fan. Thank you, Deputy President. I thank Dr. Webster NG for this motion. This motion is about developing a strategic tax regime to improve business environment and to ensure sustainable development of Hong Kong. Our tax regime is not just to guide industrial development, it's also about distribution of resources. The government is responsible for taking good care of our citizens. Therefore, we need a visionary and competitive tax regime framework to invigorate our economy. We should also ensure even distribution of resources and even development. Tax reform can provide a direction for new emerging industries. Tax incentives can help speed up the building of such an ecosystem. I'm concerned about aircraft parts. The entire world is fighting for growth points. For example, Singapore provides 8 to 10% of tax breaks for aircraft leasing. For aircraft parts and relevant frontier technologies, a 5 to 15 year of tax waiver period is provided in Singapore. In Hong Kong, we have relevant tax policies, but we need to expand the scope of such policies. On aircraft parts trading as well as leasing, there should be one-stop services to attract global airliners to come to Hong Kong. That way we can speed up the building of a complete ecosystem and we can build Hong Kong into an Asian aircraft parts trading and processing center. Our tax regime can help promote industrial growth, but the core is about resource allocation. There's been a narrow tax base in Hong Kong, and we need to confront this issue. Our tax regime rely on profits tax, salaries tax, as well as stamp duty from land, and which has been quite volatile. With an aging population, we see greater pressure on public finances. Therefore, the SAR government should review how to expand tax revenue in this digital era so as to ensure more stable public finances that caters to the needs of the new era. That way we can ensure sustainable public finances. Expanding the tax base requires a community's consensus. We have to be prudent in this process. In the meantime, the government has to spend money smartly. For example, in large-scale investment projects such as the Northern Metropolis, there should be a clear return mechanism to gauge the effectiveness. We have to ensure that the infrastructure projects can contribute to our city. these projects account for 7 to 8% of our expenditure, and so government needs to invest smartly, and the investment should be made public and transparent. Take investment corporation as an example. I think the government can make public the relevant information and help supervise the investment to make sure effective use of public resources. Our tax regime is not just a financial tool. Instead, it helps consolidate our status as an international financial center. It's also there to ensure fair distribution of resources. We have to make use of our tax regime to support new emerging industries. We have to build a diversified ecosystem and at the same time ensure a broad tax base to make sure that our public finances can be sustained. Thank you. Mr. Albert Chuang, I speak in support of Dr. Webster Ng's motion as well as the amendments. We see global economic restructuring. We have to enhance our competitiveness. Our tax regime is renowned for its low tax rate and simple taxation, and we managed to consolidate our status as an international financial center. However, the existing regime is not enough. The government is formulating its first 5-year plan, and we have to align with the national 15th 5-year plan. And we therefore need a visionary and competitive tax regime framework. As we explore the flexibility of our tax regime framework, we have to be certain about the stability of our taxation. Our tax regime needs to be clear and with high predictability in order to boost investors' confidence. We passed the Stamp Duty Amendment Bill 2026, and for residential property transactions that involve over $100 million, the stamp duty rate will be increased from 4.25% to 6%. And the government has been adhering to affordable users pay principle. If you look at the statistics in 2025, however, the relevant property transactions are lower than 200. Investors care about confidence and predictability. People are worried if this tax measure would send out the wrong message. That is, if the property market is doing well, the government will increase the tax. And so it makes the affordable users pay principle unpredictable. And that would affect investors' sentiment. This shows that we need a clear and stable tax regime framework. To build this framework, we have to take into consideration talent as well as talent distribution. The Northern Metropolis is going to be the future core of our INT and new emerging industries. We need stable policies. The government is amending and revising its preferential policy packages to foster investment. For the dedicated legislation for the Northern Metropolis, we should target biotech, AI, and advanced manufacturing industries. Building on the existing basis of tax break for R&D expenditure, we should enhance the tax regime. We should extend the tax exemption period for profits tax deduction for enterprises, and that would give more certainty to key enterprises. A lot of other cities have the same practice. Take Shanghai as an example. For qualifying enterprises, within 5 years' time starting from their registration, their profits tax could be reduced from 20 to 15%. And this is a very attractive tax policy. Depends on talent. Neighboring regions and cities have been rolling out measures to compete for talent. So we have to break away from conventional mentality. We have to come up with a forward-looking and sustainable mechanism. Take Shenzhen as an example. There is a scheme that provides subsidies for talent. And in Guangdong, for those who are eligible, they can enjoy subsidies for property purchase and car purchase as well as for healthcare expenses. They get prioritized to enjoy certain services. So as we formulate our tax regime framework, we have to take into consideration tax concessions and support measures for talent. We can provide for eligible INT talent salary tax exemption. We can also offer tax for those who are purchasing properties and who bring their children to Hong Kong. And this way we can retain elites and talents in Hong Kong. To formulate a strategic tax regime framework, we have to take into consideration the stability required in Hong Kong, and that way we can navigate the global volatility and consolidate our status as an international financial center. I so submit. Thank you. Mr. Dennis Leung. I speak in support of Dr. Webster Ng's motion on developing a strategic tax regime to consolidate Hong Kong's status as an international financial center. I support the other amendments as well. We need a forward-looking and competitive tax regime framework to dovetail with the National 15 Five-Year Plan outline. We should further leverage our strengths under one country, two systems. To ensure a successful tax regime framework, we have to make sure we can drive economic growth, and second, protect enterprises, and third, protect the interests of the general public. I'd like to talk about the corporate rescue regime. The motion mentions we need such a regime, and I am concerned about that. Back in 2020, the government planned to implement a corporate rescue regime. However, there's no progress till today. The FTU is concerned about workers' rights and benefits. Mr. Bill Tang is concerned about the bankruptcy of California Fitness and other bankruptcy case of ATV. Employees could not participate in the negotiation with creditors, and they could not pursue their old wages when the companies were liquidated. If the corporate rescue regime could not protect employees' interests without a consensus, we should not go ahead with the legislative exercise. I agree that we need a comprehensive corporate rescue regime. However, we have to make sure that employees' rights could be protected, to make sure that they won't be sacrificed in the restructuring procedure. The government should balance the interests of various parties. It should come up with a way to ensure corporate restructuring and ensure the rights of workers could be benefited. As the government developed the Northern Metropolis, there should be dedicated tax incentives. Some political parties suggest that there should be tax incentives for newly registered enterprises in the Northern Metropolis to attract enterprises that engage in new and green technologies to establish a presence. There are also suggestions that we should provide tax exemptions for enterprises that invest in the Northern Metropolis. I think targeted tax concessions can help attract talent and help build the Northern Metropolis. In the long run, that could ensure high-quality development as well. However, we have to ensure the rights of all classes of workers. We should also not neglect the affordability of taxpayers. LegCo research shows that since 2016, allowance for married couples only saw an increase of 9.8%, but there has been an inflation rate increase of 10.8%. While there is an one-off tax relief announced in the budget, this is not enough to offset inflationary pressure. I hope that for married persons, there should be an allowance that's linked to the inflation rate, so that the middle class as well as those who are married will not be strained. We need a comprehensive tax reform. We can draw reference from the consultation in 2006 to 2007. We should study introducing goods and services tax. With an aging population as well as an increase of public expenditure, tax reform is inevitable. I have to stress that any kind of tax reform has to balance public finances as well as people's affordability. We should not enhance the financial pressure of the grassroots and the middle class just because we want to broaden the tax base. All in all, I support the idea of rolling out a strategic tax regime. However, we have to solve the issues of neglecting employees' rights as we formulate a corporate rescue regime. We have to come up with a tax regime that's competitive and can take care of the needs of the general public. We have to take into consideration the affordability of the middle class and other families. I so submit. Thank you.
Mr. Ken Wong. Thank you, Deputy President. I speak in support of Dr. Webster Ng's motion. Our tax system is where our competitiveness lies. It helps us attract talent and capital. It is an important policy tool to drive industrial development. We need to develop a forward-looking, flexible, and strategic tax regime. We need to keep consolidating our own strengths. We need to use tax policies to add power to our industries. Accounting, law, technology, we have our own competitiveness in professional services. With preferential packages, we can encourage enterprises to expand their businesses and thus enhancing their international competitiveness. My background is education. I need to emphasize talent plays a pivotal role. We need to attract top-tier talent to Hong Kong by providing preferential packages. And we also need to encourage enterprises to provide training for talent. We need to help the labor force in Hong Kong to align with international standards. This is exactly how we can keep our innovative strengths going. We have the territorial source principle. We have a low and simple tax regime. For the first $2 million of profits of corporation taxed, the rate is 8.25%, and the profits above that amount is taxed at 16.5%. We have a stable business environment. We need to continue to enhance family-owned investment holding vehicles. We need to keep our own special features of the tax policies. We need to provide stable support and safeguard for local enterprises and capital. We also need to enrich our local economy. We need to enhance our family offices with tax policies. We also need to enhance our status as an asset management center. We need to develop maritime arbitration as well as insurance services in the global arena. We also need to explore green tax policies, commodities trading, transactions, and so on. The whole world is after sustainable development. We need to tap into this area. In view of changes in the international tax landscape, we need to cling to our own strengths. That is a low and simple tax regime. We need to lend more support to emerging enterprises in a targeted manner. We need to help more enterprises to consolidate their strengths, to upgrade and transform. I so submit. I support the motion. Mr. Kenneth Lau. Deputy President, Hong Kong is known for its low and simple tax regime. We have been attracting international and global enterprises and talent to come to Hong Kong for development. However, there are geopolitical tensions escalating and global economic and technological landscape is being reshaped. Singapore is launching different tax concessions, and the UAE also has a policy on tax exemptions for free trade zones. we can see that every single government around the world has the determination to troll for international talent and enterprises. There's a global race for talent and capital. We cannot rely solely on our low and simple tax regime. We need to think out of the box. We need to lead the region. We need to formulate targeted, strategic, and flexible tax regime or tax policies. We need to be on the offensive. Our goal is to stand out in a new race of capital and talent. We need to enhance our status as an international financial center. We need to appropriately align it with the National 15th Five-Year Plan. The Northern Metropolis is actually the engine for growth for the local economy. That is exactly why we need to provide attractive tax arrangements in order to attract large-scale enterprises to come to Hong Kong. We want to forge an ecosystem for Hong Kong. As for the dedicated legislation targeting the Northern Metropolis, there should be tax rates for profit tax in the first 5 years. There should also be tax concessions. And for properties, industrial, commercial, and residential properties, we should provide rental concessions in order to turn the Northern Metropolis into a livable area. The Northern Metropolis will be the major area of economic growth. The government provides additional tax concessions in relation to R&D expenditure, especially when it comes to low-edited economy, smart robots, biomedicines, and so on. There are special tax concessions provided to the R&D outcomes of these sectors. We need to expedite the commercialization of the R&D outcomes in these areas. In parallel, this is the first time that the 15th Five-Year Plan supports Hong Kong for forging the ecosystem for commodities trading. We need to reference what is being in practice in Singapore, that is the Global Trader Program, GTP. We also need to set up a supply chain management center for multinational enterprises. We need to provide more aggressive profit tax concessions in order to attract more enterprises to come to Hong Kong. We need to stay aligned with our national strategies. The 15th Five-Year Plan explicitly supports Hong Kong into being developed into an international high-caliber talent hub. We need to continue to attract more talent by way of providing more tax arrangements in relation to talent. We need to provide more tax concessions in order to attract more talent so that they will not be taxed in two jurisdictions. Regarding the higher educational institutions that would like to set up the schools or campuses in the Northern Metropolis, we also need to provide tax concessions for them. They groom next generation talent and build a higher quality talent pool to us. This will further contribute to our country. We are at the critical juncture of economic transformation. I expect in the first 5-year plan of the Hong Kong government, we will see systemic and forward-looking strategic tax regime. This will help Hong Kong to be more appealing in the existing global economic landscape. Thank you. Dr. Alvin Lee. I thank Dr. Ng for the motion and Mr. Rock Chen and Captain Lam for the amendments. Dr. Ng moved the motion on developing a strategic tax regime. We need to be on the offensive. We need to support different industries in Hong Kong, such as finance. We also need to further enhance the business environment of Hong Kong. I also support Mr. Rock Chen's amendment. That is to provide tax exemptions in relation to dedicated tax legislation. The Northern Metropolis is tasked with tolling for enterprises for Hong Kong. I hope that the government will strike a balance after considering the feasibility in this regard. We need to provide a set of strategic tax regime to, on the one hand, draw for more capitals or enterprises, and on the other hand, we need to attract more business activities as well. Captain Lam referred to Hong Kong being an international shipping center, and in 2024, the Hong Kong government published a blueprint on the cultural and creative industries. I'm a practitioner in this regard, and I would like the government to focus on how to roll out more tax concessions in this regard. In 2022, the industry contributed about $22.1 billion, and that account for about 4.5% of the local GDP. In Hong Kong, we have a lot of great products that showcase the soft power in Hong Kong, such as anime, comics, and so on. And these are what we call creative, culture and creative industries IP. And we have the Walden. We also have different IPs such as Master Q and Labubu. There are a wide array of other products related to these IP. We need to seize upon the strengths of Hong Kong to commercialize these IP. The creation of contents in this regard will also help consolidate Hong Kong's role as an international financial center. UK, Korea, these see significant growth in the creative industries. These governments provide support to different regional IP. The UK launched 2 tax concessions in lieu of the original tax policies. Enterprises can claim a concession of 53% when they have yet to reap any profits. This will drive the growth of the digital creative economy. As regards Korea, there are also tax concessions in place. They can apply for tax concessions of 10% to 15% for a period of 3 years. There are comments that they want to see more products with these tax concessions. We're in an era of information boom. We need to make good use of AI to stay competitive in the cultural and creative industries. Take Japan as an example. They are helping enterprises to develop AI assistive tools. They are also buying digital production tools. For enterprises buying these tools, they will be eligible for tax concessions. As I mentioned, we need to attach more importance to the creative design industry in Hong Kong. This is the soft power of Hong Kong. This shows the creative strength of Hong Kong. We have the special feature of an East meets West Center for International Cultural Exchange. We need to boost local economy by way of these areas. I'm from the cultural and creative industry. I also submit a support motion and the amendments.
Mr. Chris Ip. Mr. Deputy, along with London and New York, Hong Kong is among the world's top 3 financial centers. We're also among the world's top 3 art trading centers. This is the case because art pieces are a storage of wealth. People can sell the art pieces for money. That's why for art pieces trading, we should come up with a tax policy. And this is crucial to our development as an international financial center. And this is what I will discuss today. Hong Kong is a free port. Anyone bringing in or exporting art pieces pays no taxes. We have a low and simple tax regime. We have no capital gains tax. Art collectors can resell their art pieces for a profit. That profit is subject to no tax. So for Hong Kong to become an art trading center, our tax system has laid down a solid foundation. In 2023, in terms of art trading and also collectibles, antiques, the market was $105.5 billion. The financial secretary proposed a study on investments and talent to strengthen Hong Kong's lead in being an art trading center. This effort warrants our support. But I say we should provide tax breaks for art trading so that Hong Kong becomes a more competitive art trading center. Family offices are something that financial centers around the world are trying to invite over. This government has launched tax breaks to lure single family offices here. The results speak for themselves. Family offices invest in a variety of tools, and they also invest in art pieces. Hong Kong has no capital gain taxes. Family offices may trade in art pieces frequently, and for that reason, family offices may be subject to profits tax. So I suggest including art pieces in tax-exempt items so that when family offices allocate assets in the form of art pieces, they don't have to pay taxes. Now, on valuation, storage, and also auctioning of art pieces, we can create an entire industry chain out of it. We can learn from the experience of aircraft leasing and ship lease. We can provide specific tax breaks for art trading. And this can turbocharge the development of art trading, and that can also bring in art talent. That will also create quality jobs for Hong Kong. There's a market for quality art pieces, but we leave it entirely to the market for valuation and using art pieces as collateral for financing. There is no regulation, and that restricts art finance to a niche market. That also gives rise to money laundering risks. So we should first consult the art trading industry and develop a robust legal framework for art valuation and art as collateral for financing. And that will strengthen our edge as an art trading center. The government should design tax breaks to elevate Hong Kong's status as an art trading center. Let's foster the development of art trading so that we contribute to Hong Kong's development as an international financial center, and we can create an artistic atmosphere in Hong Kong. I so submit and support the motion and all amendments. Dr. Thomas So. Thank you, Mr. Deputy. I support Dr. Webster Ng's motion. Hong Kong has long maintained a low tax regime that attracts talent and enterprises. Major economies elsewhere are also rolling out tax breaks to attract talent and businesses. We want talent, we want businesses, we also have to support mainland businesses in going global. We have always been amending our inland revenue ordinance. For example, we rolled out tax breaks for family offices. We also rolled out tax deductions for intellectual property. We also revised the law for our stamp duty. There is a need to develop a strategic tax regime. Now, for the Northern Metropolis, we need a dedicated tax setup. The Northern Metropolis will be our future growth engine. There will be a piece of dedicated legislation for the NM. The consultation has started. So we can propose specific tax breaks for the NM, so that you have principal legislation and also subsidiary legislation that can give effect to the tax breaks. The Financial Secretary announced a steering committee on industry investments and strategy. There will be preferential policy packages. We can consider the technical expertise and other characteristics of industry to provide tailored support. We have to provide enough incentives for industries and businesses. How do we provide tax breaks for businesses settling in the Northern Metropolis so that they can enjoy concessions at different stages? We want to bring an entire chain of businesses to the Northern Metropolis. How do we provide tax incentives to encourage clusters in the NM? Attracting businesses and investment in the NM calls for a strategic approach. We also have to improve the existing tax dispute resolution system. Now, the system goes like this. You lodge an opposition to the Inland Revenue Department. You can even appeal the case to the High Court. The Tax Appeal Panel is a statutory body. It hears cases and it hands down rulings. The last improvement to this panel was back in 2015. It was the Inland Revenue Amendment Ordinance number 3 from 2015. With the Northern Metropolis development, there will be more tax disputes. Since it's 10 years since the last meeting, the last amendment. So we should make the most of this panel. The last amendment was made many years ago. That panel does not publish annual reports, so we should assess the effectiveness of the panel. How long does it take on average to process a case? What's the trend in the caseload? We should also use technology to shorten the lead time for hearings. We should also explore alternative dispute resolutions. There's a conciliation mechanism so that a settlement can be reached before a hearing. We now have the International Organization for Mediation with us. We should promote mediation. So we should make mediation a part in the early step of a dispute. Designing a strategic tax regime to consolidate Hong Kong's status as a financial center is a pressing task. I support the motion so that we create greater impetus for Hong Kong's long-term development. Thank you, as also submit. Members, we will not be able to conclude the motion today. At around 6:15 p.m., I will suspend the council. Mr. Yu Ming. I support Dr. Webster's motion and all amendments. We're an international financial center with a low and simple tax regime. Money comes in and leaves freely. That's how we attract businesses and talent. The global landscape is shifting. Competition is becoming keener. So we need a more strategic tax regime to consolidate and enhance Hong Kong's advantage. Mr. Rock Chen proposes dedicated tax legislation to offer conditional incentives for businesses in frontier technology. We can provide some sort of tax breaks in the early stages, and then if those businesses stay, they get more tax breaks. These tax measures can encourage the development of vital industries, and this can improve the INT ecosystem. We can bring in talent and professional services, and that will also retain such high-end businesses. After we bring in the businesses, we should provide incentives for them to stay. So we have to start with sweeteners to get those businesses to come here, and the Northern Metropolis can be a pilot area. The outline of the 15th Five-Year Plan expressly supports Hong Kong's effort to become an INT center. Our tax system is a vital tool. We have to maintain our low-tax system. We also need a far-sighted and bespoke approach. We should focus on the high value adding and high potential industries. The Northern Metropolis is at a critical stage. The tax system should be closely linked to industrial development and urban development. There's land in the NM, and we also have the Sentin Technopole. We're at the stage when we can potentially create our own Silicon Valley. Our tax policy can reduce the upfront cost for businesses, and that also offers businesses greater confidence to come here. This can cement our status as a financial center, and this can also lead to the deep integration between finance and technology, and then we will have wealth management and other forms of high-end services. The government should review the current tax arrangements. We should explore more tax deductions for expenditure. And we should improve the tax arrangements for warrants. We should also work with other partners on tax policies. We should make Hong Kong more attractive to family offices. Research and development in INT require a vast amount of upfront investment. Tax concessions for this area will encourage businesses to engage in R&D. A strategic tax regime can strengthen Hong Kong's competitiveness. We should seize the opportunity of the Northern Metropolis by offering a more strategic tax regime to bring in businesses and talent. As so submit and support the motion and all amendments. Thank you.
Mr. Chen Puilang. Thank you, President. The National 15th Five-Year Plan stresses high-quality development and deepening tax reform. It has rolled out suggestions on tax concessions, for example, child allowance and childcare leave allowance. In this year's budget, the government announced the setting up of the Advisory Committee on Tax Policy to support the economic development of Hong Kong. We have been renowned for our low tax regime. It only covers profits tax, salaries tax, and property tax. Under the tax regime, we offer many tax incentives to attract businesses and talent. However, I think the existing tax regime sees room for improvement, especially tax incentives that target to draw for talent. In the National 15th Five-Year Plan, Hong Kong is regarded as the 10 major centers. Based on these 10 major centers, we can roll out tax incentives targeting talent. For example, there could be further tax breaks on salaries tax for talent. There could also be special tax concessions to subsidize talent daily living in Hong Kong. To enhance our appeal for international talent, we can roll out specific subsidies for talent with children, and we should also roll out tax relief for childcare leave or childcare service. Hong Kong and mainland see close exchanges. Many talent and professionals, they travel between these two places. We should eliminate double taxation, and so that tax relief for Hong Kong people can be extended to specific industries to avoid double taxation. On profits tax since 2008-2009, the tax rate has been capped at 16.5%, and compared with the minimum tax suggested globally, that's 15%, is higher. While in 2018-19, we introduced profits tax exemption for lowering SMEs' burden, the tax rate has not been adjusted for 18 years. The SAR government should study whether there is room to review the tax measures. Currently, we see a two-tier profits tax regime. Under the regime, the line is drawn at $2 million. Can there be a further tax ladder? And can there be a progressive tax system to enhance the diversification of the profits tax system? To attract key enterprises, I agree with Mr. Rock Chen. We should target key enterprises. For enterprises that come to Hong Kong within a certain period, we should introduce tax waivers for them. Formulating a strategic tax regime is equally important for the insurance sector. A competitive tax regime can consolidate Hong Kong's status as an international risk management center for captive insurers as well as other insurers. The profits tax exemption is at 8.25%. This can be extended to other special insurance items. For example, reinsurance. We can also draw reference from Singapore's practice. We can exempt the tax rate for captive insurers for 10 years, and in Qatar, they do not levy tax on captive insurers. We should provide greater tax incentives to make Hong Kong more appealing for insurers. Also, to promote wealth management and the use of capital, the government can, through tax incentives, attract ultra-high net worth individuals to come. For example, we can offer insurance products as well as life insurance products to attract these individuals to allocate assets to Hong Kong. They should enjoy the tax incentives that apply to private equity funds. I now suspend the meeting until 9 a.m. tomorrow.